All right, welcome back. Here we have another market maker model. This was February 29th, the day after the previous one that I recorded, and we're going to use new day opening gap to help frame a smart money reversal. And as we can see, the new day opening gap right here gets respected right there. So if you don't have this new day opening gap, this marks the current new day opening gap. This might look like it's a random level that we support off. Maybe you think it's an order block, which yes, we do come down into this order block into the lower portion of this fair value gap. That's why this new day opening gap doesn't mean anything unless it's framed with other PD rays. But when it's framed with other PD rays, that new day opening gap is powerful. So as you see, we come back down into this last down close candle here and right into that new day opening gap, that lower portion of this fair value gap. That's where we reprice to. And then look at the bodies of this one, of the 15-minute candles respecting this new day opening gap as well. Then we actually reaccumulate within these new day opening gaps as well, heading to buy side liquidity. So as we see here, this kind of is a later PM session of model. As we see, the 950 macro allows expansion lower. Then this is around the 1050 time, and then we expand lower into here. We create fair value gap in, fair value gap in, fair value gap out signatures, and then we head up to buy side liquidity. As we see here, reaccumulated within this new day opening gap up to buy side, and look at 50% of that imbalance right here gets respected. We see buy side liquidity, and then this is ES again, and as you see that new day opening gap right there getting respected. 5-minute change to delivery right there gets respected nicely. Then we come back, we reprice to where 5-minute order block within that new day opening gap, 5-minute fair value gap, within that new day opening gap, and then we seek buy side liquidity here. And here is lastly the 1-minute chart. I didn't do too many annotations. I just wanted to submit this into the journal. The fact that we had this new day opening gap get respected nicely, and look at that up to buy side liquidity there. And then this is NASDAQ, and as we see, that's that 50% of that fair value gap, and we could swing grade this from low to high 25%. We expect to see a low risk entry. As we see here, we have order block there, and there's not really an entry here. We just create a balanced price range, trapping all these traders within this fractal here around 50%. We consolidate, we end up having a stop right here, and then we get a swing higher, and then right there, new day opening gap right there, stop rate as well, and then boom, up to buy side liquidity there. And here is lastly the 5-minute chart here, and as we can see, we have that 1-minute order block right there, create a wick here showing that we might want to reprice higher. Once we get that balanced price range, we know for sure it's more probable that we're likely going to head to this high. It still could happen. We still could reprice lower, but the fact that we've had this just on this time frame, and this is without higher timer bias, as well. And then we get sell side liquidity there, 5-minute imbalance right there. That's the soup. Then we reprice higher. Same thing again in that 5-minute imbalance there, in that new day opening gap, and then we reprice to the buy side. So yeah, that was this market maker model, just short and sweet, simple.